The property doomsayers are at it again, aren't they? Hi, I'm Michael Yardney, and recently economist Harry Dent warned that the Australian market is looking much the same way as the Japanese market did before its crash in the 1980s. That's when values fell by as much as 60%. Now, of course, he's not the only one who's predicting a significant correction in our property prices. Others are suggesting years, maybe even a decade of flat property values. Look, of course, there's nothing new about this. For all the years I've been involved in property. Now, and that's fast getting close to 40 years. It's actually quicker than I'd like to say. There's been groups of people who are sure that our property markets would collapse. And they'd often give what sounded like sound arguments to back up their forecasts. But you know what? Those pesky house prices refused to behave. Sure, they'd stall for a while, occasionally for a few years in a row. Sometimes they'd drop a little, especially in holiday locations or in regional or mining towns. But when you look at the overall median price of Australian residential property, it has never really collapsed. Well, other than after the Second World War, but then it recovered quickly. Now, before I explain a little bit more about what I think is going to happen to property values and why, let me just quickly remind you that at the end of October I'm running my Real World Real Estate Workshop. That's Australia's longest running advanced property training, and I'd really like you to join me because when you come out of it, you're going to understand the fundamentals of property renovation, property development, property research from Australia's leading faculty of property trainers. And it comes with my personal money-back guarantee and a 9-year pedigree. So click the link down below and find out more about the workshop. Okay, what's really happening with property values? According to RP data, they recently said that Australian house prices, the median price in Australia, fell 0.9% or $4,700 in the last quarter, and it dropped just 2% or $10,600 over the last 12 months. Look, think about it. Effectively, that's no real change in value, which is remarkable given the general lack of market confidence, the negative media our property markets received, and the persistent warnings from all those property doomsayers. Of course, the Australian share market frequently falls more than this in just one day. Okay, housing is expensive. I'm not denying it's fairly expensive in Australia, but there's some really good reasons for this. Look, first of all, Australia's got the largest dwellings in the world, and they're of a high quality. Look, it may be extravagant, but it's the way we choose to live. Also, more of us want to live in houses on large blocks of land close to the CBD, and that's where there's a shortage of supply. While in other mature cities, a much larger percentage of the population live in apartments. We also like to live in, 6, 7, coastal cities. And all around the world, coastal cities have always attracted a premium in property values. We also want to live in those suburbs close to the CBD and close to the water because they're better serviced by amenities, by facilities, by public transport, better than the outer suburbs. And also there's a lack of affordable land at the city fringes, and this is partly due to significant development and infrastructure costs. The fact is that the high cost of housing in Australia is one of the prices that we've got to pay for living in the best country in the world. Now, importantly, despite relatively high levels of household debt in Australia, the households that hold this debt can still afford to service mortgages. Less than 1% of mortgages are in arrears currently, and this is an international low. It's also comforting to know that 75% of all household debt in Australia is held by the top 2/5 of income earners, those who can afford it more. In a recent blog, Christopher Joy explained how, contrary to popular belief, Australian housing hasn't really become less affordable over the years. So what about all this stuff that happened overseas? When the commentators compare our markets to overseas, it's the old story of comparing apples and oranges. The US economy is in recession, but the state of Australian economy it's actually the envy of most developed countries in the world. The US housing market crashed because of poor lending practices that allowed people to borrow more than they could afford to repay. Our banking system is sound, and our lending practices are good. Americans built too many houses, leaving them with a huge oversupply. That's not the same here, well, other than a few spots like on the Gold Coast. But watch out, I think there's an oversupply looming in the Melbourne and in the Brisbane CBDs. Overseas in the US there's huge unemployment, yet here anyone who wants a job can get a job, and our wages are rising. Okay, but what about all these people saying our property markets are going to collapse? What could cause our property markets to collapse? Think about it. The factors that could cause our property markets to crash are, one, a recession. But I don't know anyone who's suggesting we're going to have a recession in the foreseeable future. Or number two, massive unemployment where people just couldn't afford to keep up their mortgages. Again, this is unlikely in the near term. The third thing that could make a property market crash is a significant oversupply of properties. But again, as I said, other than on the Gold Coast and in a number of our CBDs, where there's a few too many high-rise projects being completed, other than those areas, we don't have an oversupply. The fourth thing that could cause our property markets to crash, I'm not saying would, but could, would be high interest rates. And the prospect of that has now been averted by the world's financial turmoils. So putting all this together, it's unlikely that our property markets are going to crash. While I've got great confidence in our medium and long-term strength of our property markets, I do recognise that despite the sound fundamentals, market sentiment is going to cap property prices for some time to come. I can't see a major change in market sentiment until a number of factors play out. Look, if you think about it, we've lost confidence in our government. We're concerned about the carbon tax. We're unsure about overseas economic turmoil. These issues, they're not going to go away overnight. So here's my recommendation to you. First of all, don't panic with all that's happening overseas or around the world. Number two, learn from history. Every stock market crash has been followed in Australia by a property boom. Number three, review your current property portfolio and your financial plans in light of what's going on around you. And number four, I think now's a good time to refinance your property portfolio. Just top up your buffers to make sure that you can get through the ups and downs in the next little while. This is going to put more money in your kitty if any speed bumps come our way. And number five, take appropriate action. Now, I don't know what that is for you. For some people it may be to sell underperforming assets. For others it may be to set yourself and your family up to take advantage of the inflationary times ahead by owning properties that are going to grow in value at above average rates of return. Now, if you really want to get ahead of the pack, I recommend you join me for my 3-day real-world real estate workshop in October. It's Australia's longest running advanced property training, and it's going to be your chance to invest 3 days, 3 powerful days, and learn all the renovation and development strategies that experienced property experts are using all around Australia to manufacture capital growth and generate strong rental returns. That'll allow you to win in today's challenging property markets. I urge you to take your property investment to a whole new level. So click on the link below and read all about the workshop, read all about the bonuses and my personal money back guarantee. Now, of course, between now and my next update, I'm going to keep you up to date with regular blogs. And I'll be in these updates, I guess, keeping you up to date with what's happening. But there's so much going on in the markets. I urge you to not only subscribe to my newsletter, which is probably how you got to this link, but also to my daily blogs. That's a different subscription. So click on the link above and subscribe to that. Gives you just a short, quick update. Catch up with you soon. In the meantime, have a great week. Make it a great week. This is Michael Yardney.